Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the forex markets today, guys. Well, actually, we do not see any changes in the performance of the euro currency by far. I thought that it would be interesting to take a look at few interesting moments on Japanese yen and on a cross to Great British pound. So there's a few interesting things, and also we will take a brief look on the New Zealand dollar. It's also important. On the euro currency, we're just waiting for the same pullback that actually we discussed recently, so nothing has changed in our trading plan. Hopefully you have met our Telegram channel, so it was really fun yesterday to update it, and today we will proceed as usual. So there are a few interesting issues exist that I would like to share you today. Let's start first maybe from New Zealand dollar, because it is really bright picture. So take a look what we have actually. Here we have the failure of the hand shoulders pattern. If you remember the Great British pound weekly chart, you probably could compare it and find a lot of same things very similar to it. Particularly speaking, similar acceleration stands right there. It's coming to the previous lows. Currently market stands at oversold on the monthly chart. That's why we see some minor pullback and stop here, but no doubts that market will proceed lower. And I will not be surprised if the New Zealand dollar will hit the 50 even area. It's 127 extension of this most recent swing up. Also, you could calculate some different extensions. This A, B, C top, OP probably also might be used as a target. But here is interesting the fact that the hand shoulders here has failed. Why is this important? Because we have another Asian Pacific currency, which is Australian dollar, where head and shoulders is also failing, but overall situation stands a bit better. So if we'll take a look at the monthly chart of the Australian dollar, you could see that here we have the drop deeper than the shoulder, but you can see market stands significantly higher than a New Zealand dollar, and potentially if rally in the United States dollar will stop by some factors that we have discussed previously within the few months, well, here on Australian dollar, market probably could find some ability to stay above the lows and keep the chance. Maybe we will not be able to treat it as a hand and shoulders anymore if, for example, market stops at the XOP. But at least it will be some kind of the guard triple to buy or something of that sort. That might be important because this is on the monthly chart. If you remember, I have repeated a few times that Australian dollar currency, by the fundamental background, really very good compared to all other currencies, especially to the Japanese yen, Great British pound, because Australia has very good fundamentals, low debt to the gross domestic product release, nice interest rate right now, it's relatively high. Also, Australia has direct relation to the commodity supply on the global market. So from that standpoint, Australian dollar is just the perfect currency. Unfortunately, just the hostage of the technical issues while it's dropping together with a lot of markets, just because market currently needs liquidity, needs United States dollar to finance positions, to finance margins, to finance rising interest rate expenses, and all the stuff stands in United States dollar. So, and those who have the Australian assets also have to sell them to get the dollars. But you can see the currency resists to negative impact much better. So if all other current currencies will already see below these lows, just to recall, euro currency, Great British pound, Japanese yen, New Zealand dollar is almost below these lows. Australian dollar, well, looks really nice, something like gold. So that's why I still think that the first assets that we have to buy when the crisis will come to an end is Australian assets, and stocks, maybe even bonds in Australian dollars. So this will be a great investment. Now let's take a look at the Japanese yen. And Japanese yen is very interesting stuff. So it's currently challenging 150 level. So on 145, government of the Japan have made an attempt, Bank of Japan made an attempt to hold the rally by making the intervention, but as you can see, it has no actual effect, and that's understandable. Today I tried to put in a Telegram channel just briefly why the Japanese yen has really big problems, because it's a very specific country with a very high debt to gross domestic product rate and a very specific bond market, whereas a lot of major part of the bonds belongs to government, so they are not on the open market, and that really makes very tricky moment. Every time, guys, we talk about the United Kingdom, European Union, maybe the United States, but we forget about the Japanese yen. And currently, with this performance that we see on the Japanese yen, I'm not exclude the chance that, well, it might be the Japan actually who triggered the domino effect on the financial markets. It could start even not from the United Kingdom, it could start from the Japan. So technically, we have the hand and shoulders pattern and it hits the OP, but take a look at the performance at the OP with a strong acceleration compared to AB leg and in general. Usually from a technical point of view, if we suggest that everything will stand as it stands right now without no interventions from the Bank of Japan, this is really big chances that maybe some retracement here might happen, but there's big chances that market will proceed high to the XOP. XOP stands 180, and if we will take a look at the fundamentals of the Japan, you will see that the chances to hit 180 actually are not unreal, so they're absolutely possible in the current circumstances. So I'm not excluding the chance that this will happen. So if we talk about the Australian dollar as among the best current countries for investing, I would say the Japanese yen is among the worst currencies currently for investment, and based on the policy of the Bank of Japan, based on the fundamentals and in general. So using the classical approach to estimation of the target of the hand shoulders, you could see, well, approximately the same area as the next OP here is 175, it's 180, so very close to each other. And with the relation to all of this stuff, it's interesting to take a look at the cross of the Great British Pound to the Japanese yen. Let's take a look. Actually, I already shown you this chart. We have a few targets. First of all, here we have the XOP with this ABCD pattern, it's 176, and we have the large ABCD COP, stands 173. Both targets stands above this area. It means that to reach it, market either gross domestic, Great British Pound has to rise a bit, or Japanese yen should fall, or they just could move in the same direction, but most probable this will be to the downside, but Japanese yen should be faster than the Great British Pound, and that is currently seems absolutely reasonable, because on the cable we expect 95 below the parity, which itself suggests it should drop, and that increased chances that Japanese yen will proceed higher to the next target. And now it's also, but from the cross-market analysis, it also doesn't seem impossible to see 180 on the Japanese yen in the midterm perspective. So these setups that we discussed right now, they are maybe not useful for direct trading, for particular trading steps, but they let us to make the judgment on the bigger picture and see the overall tendency that could last on the Great British Pound, on the Japanese yen, on the New Zealand dollar, and the euros to a few months.